Hello viewers, Bismillahirrahmanirrahim. Again welcome on my channel Cambridge Campus. I am going to continue my same Igcse O level accounting series, and today I am going to discuss very important key terms that would be used in the whole syllabus: assets, liabilities, equity, expense and income. So let's start. Assets. Items which a business owns or which are owed to the business are known as assets. It means these are those physical things that business owns, mean business will use these things to run, or which are owed. Owed mean business has bought from someone as a loan. So these are considered as assets. So it has two types in business: non-current assets and current assets. What is non-current? Asset that is considered as non-current if it is held for more than 12 months and not for resale purpose. So these are two features. If it would be in any asset, that would be considered as non-current. For example, building, machinery, vehicle, premises, furniture and fixture. Current assets. Assets that are easily converted into cash within a year are known current assets. Examples could be trade receivable, inventory, bank balance and cash in hand. Liabilities, amount which is owed or payable by the business, means this is the money that business is supposed to pay to someone. It has again two types: non-current liabilities and current liabilities. Non-current, if amount is paid after 1 year, is treated as non-current liability, like long-term bank loans, long-term borrowings. And current liability, that amount that you have to pay within a year. For example, trade payables and bank overdraft. Overdraft we will study later on in details. This is like short-term bank loan. Equity. Equity is the amount which the owner has invested in the business. For example, owner started a business with $10,000, so the owner equity in business is $10,000. This is known as equity. Expense, very common. Expense is the cost of operations that a business pays to earn income. As the popular saying goes, it costs money to make money. Very simple, means if you want to earn money, you have to face some cost. Some common example of costs are employee salaries, advertisement, rent, utilities, insurance, wages. Expenses depends on the size of the business. Large business pay large expenses. Last thing, income. Income is the revenue a business earns from selling its goods and service. For example, fees received by school is the income for school. Amount received by Samsung on the sale of appliances. Rent received from a building. Remember, income is different from profit. Income less expense, then you get the profit. So you have done like these 5 things: assets, liabilities, equity, income and expenses. You can see in the diagram, some diagram shows assets, some diagram shows liabilities, some diagram shows income. Like if you see the first diagram, that shows the liability, the other diagram that shows the owner's equity, and the third diagram you can see this is like income, the owner is sitting and he is getting income. And same second last diagram, it shows the assets, current assets like non-current assets. Same the other diagram, it shows the expenses list. So you can make such exercises for making your student clear. A list is given, you can identify what are the assets, what are liabilities, like loan to Mr. A. Loan to Mr. A, it means you have given loan to Mr. A, it is of course assets. If it is loan from Mr. A, then it would be liability. Plant, simply asset. Machine is as asset. Payable is liability. Rent is expense. Motor car, asset. Receivable, asset. Same exercise number 2, loan from Mr. A. Now it is considered as liability. Bank overdraft, same liability. Premises, asset. Rent received, income. Building, asset. Receivables, asset. Inventory, asset. Same exercise number 3, carriage. Carriage is like transport cost, it is expense. Vehicles, asset. Cash, asset. Bank overdraft, liability. Rent received, income. Building, asset. Commission, expense. So such type of question could come in your exam as well. which is a non-current asset of an engineering company. So you see A, B, C, D, four options are given: factory premises, long-term loan, trade receivable, inventory. So of course factory premises is non-current asset. A is right answer. MCQ number 2, which is non-current asset, bank balance, trade receivable, motor vehicle, inventory. Of course motor vehicle is non-current asset. P. Smith is making a list of his assets and liabilities, which is a liability: computer, trade payable, loan to J. Johns, and premises. Very simple. Trade payable is of course liability, which is a current liability. Long-term loan, owner's equity, trade payable, trade receivable. Same answer is C. Trade payable is a liability. MCQ number 5. What is current asset of sports goods shop? Current assets. So see, trade payable, fixture, shop premises, and stock of football. Of course, stock of football is right answer. D. What are the assets? Items that are expected to be turned into cash in the near future, items that are owned by or owed to the business, items that are owned by or owed by the business, items that are purchased for long term. Simply its answer is B. We have already done the definition of assets: items that are owned by or owed to the business. So I conclude my lesson. Assets are those things that business keeps to earn revenue. For example, vehicles are needed to transport goods from one place to another. It is provided to business either by owner's investment, or business might get these from a bank loan and will pay money later on to the bank. Businesses earn revenue from selling goods and pay expenses like sales commission, wages. So each business keeps assets, pays liabilities and expenses, and hold equity. So hopefully inshallah after this lesson you would be very clear what are assets, what is liability, what is expense, what is equity, and what is income in the business. Thank you so much.